There has been a good deal of volatility in the chip sector the last month. Semiconductor stocks were all the rage in 2024, but the last month has seen a downturn far greater than the broader market. The recent dip is due mostly to trade restrictions with China being signaled by politicians. Of course, the dip ignores the strong fundamentals of chip stocks in general. In particular, this semiconductor equipment provider has been hit hard. But is Applied Materials now a buy after its latest earnings? Welcome to The Quality Investor. I haven't been uploading as many videos the last couple weeks as I normally do. This is because my schedule has been very hectic the last few weeks, and it's not going to slow down until the end of September. But once it does, I plan to get back to 2 to 3 videos per week. Applied Materials, ticker AMAT, beat analyst expectations and projected solid growth despite the current environment. Yet the stock pulled back yet again over 4.5% at one point before settling down 1.86% on Friday. Yet more signs of weakness for Applied Materials that has had a rough month since its all-time high. Hitting over $255 in early July, it tumbled to $171.61 by August 5th. That's a 33% drop, giving back almost all of its gains year to date. But since August 5th, Applied Materials has recovered some, closing at $211 before its earnings release on August 15th. It is now up 28.7 year to date. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. So what caused this tumble for the fundamentally sound chip equipment provider? And is it a buy now, given that it's still off 19% from its all-time high? Well, first, a quick glance at why they fell. Applied Materials is already under investigation with SEC regulators for certain trade practices with China. I did a video on that a while ago, so see the link below. But the market has seemed to shrug that off, and I agree. At worst, they're facing a fine that they can easily pay. However, Applied Materials does have heavy exposure to the Chinese market. Back in July, US politicians signaled further trade restrictions with China in the chip market. This sent Applied Materials falling over 7% in a single day, and it continued to erode over the next week or so. At the end of July, recipients for the CHIPS Act grants were announced. This CHIPS Act is legislation aimed at boosting American manufacturing for chip makers. Applied Materials was noticeably missing from that list. This sent the stock down another 14% in 2 days. So trade restrictions for a business heavily exposed to China and no grant money were catalysts for a disastrous month in the market. Yet despite all of that, Applied Materials still posted solid earnings. It also demonstrated fundamental strength in the market with growth in this tough environment. They also forecasted yet more growth in fiscal Q4. Many were actually expecting flat year-over-year numbers in Q4 or even a decline. So today, we're going to take a look at their earnings and see how exposed to China they really are. We'll also reassess their intrinsic value and decide if they're a stock worth buying now or if they're actually fairly priced in the market. So without further ado, let's dig into it. Quick snapshot of Applied Materials stock price. You can see they closed on Friday at $207.90, falling early in trading, but then recovering a little bit throughout the rest of the day. However, looking at the 6-month chart here, you can see since that all-time high on July 10th, it has been nothing but disaster for Applied Materials. You can see they're on a tear throughout 2024, and it seemed the rally would never end, but as everything does, all good things must come to an end. And it certainly has since that bad news started hitting the chip market in July. But after the market closed on Thursday, they actually posted relatively decent earnings. You can see here, chip gear giant Applied Materials delivers beat and raise earnings report. Semiconductor equipment provider Applied Materials late Thursday beat Wall Street's estimates for its fiscal third quarter and guided slightly higher than views for the current period. But AMAT stock fell and extended trading. The company earned an adjusted $2.12 a share on sales of $6.78 billion in the quarter ended July 28th. Analysts polled by FactSet had expected Applied Materials to earn $2.03 a share and sales on $6.68 billion. And on a year-over-year basis, Applied Materials earnings rose 12%, while sales have climbed 5%. So overall, they're posting growth, and that's what we want to see, growth. Not only growth on the top line, but in margins as well, as we'll see here in a little bit. But here's the double-edged sword for Applied Materials. Applied Materials saw the most growth in China, where sales increased 24% to $2.15 billion. But China accounted for 32% of the company's sale in fiscal Q3, which was up 27% in the year earlier period. So China accounts for nearly 1/3 of Applied Materials revenue. That is heavy exposure to the Chinese market, especially for the American chip equipment provider. And that's why news like this is hitting Applied Materials so hard. Morning bid, chips are down as trade tensions mount. This week's tech share sell-off gained momentum after a report that the United States was considering tighter curbs on chip exports to China, adding to comments on Taiwan by Donald Trump that stirred geopolitical concerns over the sector. Chip investors have been wary of Washington's more protective stance in recent years towards the U.S. semiconductor manufacturing industry, which U.S. political leaders view as strategically important for competing against China. And to me, this is the main reason why U.S. politicians are signaling this now. Bloomberg News reported on Wednesday that the U.S. has told allies it is considering using the most severe trade curbs available if companies continue giving China access to advanced semiconductor technology. The U.S. is trying to keep our most sensitive tech out of Chinese hands, which makes sense. However, companies that rely on a lot of sales to China are going to be hit by this, especially if these trade restrictions are put in place. I highly recommend the book Chip Wars. It gives an excellent overview of the whole geopolitical context around semiconductors and why it's so important that the US keep its sensitive tech away from China. On the other hand, China is a very lucrative market, and you're going to be hard pressed to find any business in a capitalist economy stopping sales in an open market. So any government intervention in this will be seen as a negative for the market as a whole, and especially businesses like Applied Materials that have heavy exposure to China. So that's certainly a risk we're going to have to watch going forward. Looking at the earnings release, however, we can see that revenue is $6.78 billion, up 5% year over year. And like I mentioned earlier, the margins. GAAP operating margin, 28.7%, and non-GAAP operating margin, 28.8%, up 0.7 points and 0.5% year over year. So they are growing those margins. It's slight growth, but there is growth. And in a market like this right now, where there's a lot of uncertainty given the recession fears, as well as all this geopolitical business going on, it's good to see Applied Materials flexing its muscles in their earnings. One thing to keep in mind, however, with all this news about China restrictions, it's important to remember where the real demand is going to come from in the chip market over the next few years. And the CEO, Gary Dickerson, lays it out. The race for AI leadership is fueling demand for our unique and connected portfolio of products and services, positioning Applied to outperform our markets over the longer term. So when he says AI demand, what does that actually mean? So what Applied Materials is saying, at least, is they're focusing on data center AI, edge AI, EVs, and then renewable energy. To me, the data center AI is really the biggest one. And the reason for this isn't necessarily what AI can do or all that kind of stuff, but the amount of power that it generates. And that power is going to require more efficient solutions. And this is where Applied Materials' real growth potential is going to be. You can see here the projected energy usage. The thing with AI, the thing about AI is it requires a massive amount of compute power in order to run its chips. And that massive amount of compute power is going to use a massive amount of energy. So a business that can come in and design more energy efficient chips that cost less and reduce the amount of cost for energy, they will have a competitive advantage. And Applied Materials is focusing on that. In fact, the energy usage for AI is so great that Microsoft is even building its own mini nuclear reactors to handle the energy consumption for its data centers. So there's a real need to drive efficiencies there. So this is a breakdown of the revenue for Applied Materials by segment. You see the semiconductor systems at $4.9 billion in revenue, in Q3, which was only 5.3% growth. But the real growth driver now for Applied Materials is in their services segment. They had $1.58 billion in net revenue for Q3, which was an 8% year-over-year growth. Services includes things like ongoing maintenance for the equipment they do provide, as well as solutions to optimize equipment for performance and productivity, sort of like a consulting arm. So all in all, a pretty solid quarter for Applied Materials. Revenue was up 5%. Their gross margin, again, expanding on margins, up 100 bips, and operating margin was up 50 bips. Their earnings per share also up 12%. And as any company that's fundamentally sound and puts their shareholders first, they distribute that cash flow to shareholders. Their cash flow was $2 billion in Q3, up sequentially from $1.1 billion, however down slightly year over year from $2.3 billion. That was mostly due to them beefing up their balance sheet and increasing their working capital. They also pay a very nice dividend, which is actually up 25% from last year. And they also have a very nice share buyback program, buying back $861 million worth in shares in Q3. And they're stating here that they are committed to distribute 80 to 100% of free cash flow back to shareholders over time. And a quick look at what their projections are for Q4, revenue at $6.93 billion. If they hit that number, $6.93 billion, that means it would actually increase their revenue year over year. Their revenue would be at just about $27 billion. That would be up from $26.8 billion. It doesn't seem like much, but many people, including my own forecast, had their revenue falling almost 5% year over year. So they're doing much better than what analysts expected for 2024. And on that note, is Applied Materials off almost 19% right now from its all-time high? A good buy right now after updating for this quarter's numbers. So after updating for this quarter, you can see on a trailing 12 basis, their revenue is at $26.85 billion, which is right in line with what they hit last year. And per my calculations, they are tracking to beat revenue by about 1.13%. They're beating their operating profit by about 1.31% as well, and tracking to about a 29% margin. Their margin last year was about 28.85%. Net income is really on an upswing here, 13% beat here. Earnings per share is about 12% ahead of my projections. And free cash flow, despite being forecasted down from last year, is on track to beat by about 2.75% from my projections. So I was forecasting a fairly conservative year for 2024 for Applied Materials, and they're having a very solid year, beating out everyone's estimates. To me, that just demonstrates how fundamentally sound this company is. So a quick look at my assumptions. I'm assuming operating margin to be about 29% for the year, 30% at year 10 on my base case, and at 32% on my bull case. You can see that's all increases from their trailing 12, 5-year, and 10-year averages. Free cash flow conversion, I actually lowered that quite a bit from initially. I had them at over $1 free cash flow conversion, which is free cash flow over net income. Right now I have it at 95 cents. And then at year 10, for my base case, I have it at $1.07 and $1.09 for the bull case. And for dividend growth, I'm projecting about 12% per year for my base case and 13% per year for my bull case. Just last quarter, they raised their dividend 25%. So these are very conservative numbers for the dividend growth. And on a perpetual basis, 7.25% on my base case and 7.375% on the bull case. Ultimately, the revenue projections coming in about 5.8% per year on the base case and 7.27% per year on the bull case. And if we track anywhere near those numbers, which I believe are pretty conservative, our free cash flow margin at year 10 for the base case will be about 26.6%. and 29.32% for the bull case. Right now, the free cash flow margin on a trailing 12 basis is at 24.45%. So nothing's unreasonable here in terms of the growth projections. So Applied Materials closed out Friday at $207.90. Their trailing 12 earnings per share is at $8.90. And their PE right now is at 23.4. They have a forward PE of 26.4, so we're actually projecting a slight decline in earnings. And despite the PE ratios being pretty far behind what their peers are at, they're still well ahead their 5 and 10-year averages. So if we were looking at their exit multiple, it's at $362.23. Their peers I'm using are Lam Research, Kale AC, and Intragis. And they have about a median PE right now of 40. So Applied Materials PE is far lower than what their peers are at, but far higher than their 5 and 10-year averages. It'll be interesting to see if they can actually get any multiple expansion over the next few years. Despite that, I have their discounted cash flow at $175.01. Their base case is at $214.57, and their bull case is at $262.77. Dividend discount aligns very nicely with their DCF, $175.70 for the bear, $211.37 for the base, and $261.50 on a bull case. That actually would give us on a base case right now about a 20.5% upside. But of course, we always need that margin of safety. And I like a 20% margin of safety for Applied Materials. I think it's a very fundamentally sound company. In fact, they have a net positive in cash, meaning they have more cash than debt. However, due to the volatility in the semiconductor industry over the last few months, and I think there will be quite a bit more volatility, a lot of people think we may be an AI bubble. And it might be true because we just don't know how to use AI yet. I think we should use a higher margin of safety for Applied Materials. So given if we had no margin of safety, that would be a buy price right now of $252.67, which is right around their all-time high. However, with a 20% margin of safety, that's a $202.13. It might be good to even wait for that to come down lower. It did when it fell to its lowest point in early August when it was around $170 something. But between a 20 and 30% margin of safety right now for Applied Materials might be best. So I probably wouldn't be comfortable buying more until it came down past 200 and maybe into the 190 range. Like I said, very fundamentally sound. They have an ROIC of 30.92%. Their margins are excellent, 47% for gross margin, almost 29% for the operating margin, and 24% free cash flow margin. And their margins are only going to get better, especially if they continue to expand their margins and emerge as a leader in providing efficient solutions in the equipment space for the AI chip technology. All in all, Applied Materials is a very good company. I do think they're priced a little bit high right now, given the current volatility that we're seeing in the market. I would be comfortable waiting for them to come back down a little bit more. They are one of my larger positions. I have no problem holding on to this company for the long term. And I'm actually looking forward to see what they do the rest of 2024 and into 2025. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.